Hello and welcome to the Leveraging Pro Quant Portfolio webinar. My name is Emma Johnston. I'm a quantitative strategist here at Seeking Alpha, and I am here today with Stephen Cress, our VP of Quantitative Strategy here at Seeking Alpha. And we're going to go through all things PQP or Pro Quant Portfolio today. That's our latest investment product. Really quickly, let me get this disclaimer out of the way. The Pro Quant Portfolio is not an investment product run with real money. It is not a brokerage account and neither enables nor reflects actual trading activity. No recommendation or advice is given as to whether any investment is suitable for a particular investor. You are solely responsible for determining whether an investment, security, strategy, product, or service is appropriate or suitable for you based on your investment objectives and personal and financial situation, and for evaluating its benefits and risks. Seeking Alpha is not a fiduciary by virtue of any person's use of or access to the site. Any views or opinions expressed in the webinar do not reflect those of Seeking Alpha as a whole. Any content and tools on the platform are offered for information purposes only. Seeking Alpha does not take account of your objectives or your financial situation and does not offer any personalized investment advice. Seeking Alpha is not a licensed securities dealer, broker, U.S. investment advisor, or investment bank. All right.
I'm back. Can you say that one more time? I think I missed it.
Someone on the chat popped in while I was reading, and I was like, oh no, I've lost where I am. Which reminds me, everyone, the chat is open. We are leaving some time at the end of the discussion today to go over questions. So please bring those forward. I will be keeping an eye on that throughout the presentation. Really quickly about myself, I'm a quantitative strategist here at Seeking Alpha. I contribute to the stewardship of the Alpha Picks and PQP portfolios. I have about 8 years of experience in systematic equity strategies, and I most previously worked as an investment strategist for an asset manager. Steve, can you tell the folks about yourself?
I can indeed, and thank you. So I am at Seeking Alpha as the head of quantitative strategies. Seeking Alpha purchased my company about 6 years ago, and I created a technology which basically was really sort of a preliminary form of AI and quantitative systems. And we developed a system where you could put the name of any company in and get a fresh 25-page research report. Once I integrated the technology into Seeking Alpha, you will see it in its current format now. The bulk of my career was spent in quantitative finance. I spent about 14 years at Morgan Stanley, where I ran a prop trading desk in quantitative strategies. I was also the founder of a hedge fund in quantitative strategies. And in total, well over 30 years of experience in the world of finance between Wall Street and working in the city of London.
Amazing. Quite the tenure there. We're super lucky to have your expertise.
Thank you.
Just very briefly, today this presentation is going to cover why quant. So that's the quant system that powers the Pro Quant Portfolio. Then we're going to introduce the Pro Quant Portfolio and some of its portfolio highlights and talk about other pro capabilities. So Steve, with that, I'm going to hand it off to you. Can you give us a bit of a quant overview?
Absolutely. Thanks. So, when I think of quant, I do often tell people it is really similar to what an investment analyst does. If you're a research analyst that worked at Morgan Stanley or Goldman Sachs or Merrill Lynch, they have a way that they conduct research on companies and come up with a directional buy, sell, or hold recommendation. What we do is very similar on the quant side. However, we have the capabilities of using computer processing to make the job a lot easier and cover far more companies than any one single analyst can do. And the way we do that is we design our quantitative strategies around math and algorithms to identify opportunities. Now, not all quant strategies are the same. We use what I refer to as a GARP strategy, which is growth at a reasonable price plus. Some quant strategies are strictly momentum, some are strictly value, some are strictly growth. We use a diversified approach. And in that diversified approach, the core investment characteristics would be looking for companies that are collectively strong on value, growth, profitability, momentum, and upward analyst EPS revisions. And that's actually the quantity of analysts that are taking the revisions up for a stock. So when we take those investment characteristics and we create algorithms around it, it gives us the ability to sort thousands and thousands of stocks on a daily basis. So we can actually rank all the companies relative to each other in a sector and come up with the strongest companies and the weakest companies. So that's a little bit about how quant works. And Our strategy has worked very well. We have a track record. So what you're looking at now is if we were to actually take all the quant strong buys every day and measure their performance. Our track record actually goes back to 2010, but I've taken the last 5 years because a good portion of that is a back test. However, over the last 5 years, it's actually simulated trades. So you can see on the far left-hand side, the quant performance for our strong buys is up 265% versus Wall Street analysts up 52%, and the S&P 500 for the same period up 83%. So this is really not exactly an investable product because we're looking at all the quant strong buys, and on any given day there could be anywhere from 350 strong buys to 400 strong buys. So in fact, you'd have to be a computer model yourself just to execute all those trades. And here's actually the year-to-date performance. So that went back 5 years. This gives you an idea of our more recent history. Year-to-date, you can see our quant strong buys overall are up 22%. Wall Street strong buys are up 14%, and the S&P 500 for the same period up 8.4%. I think what's interesting about this is Wall Street actually typically lags the S&P 500, but this year they're doing particularly well. And I think it's because the markets have brought it out. We don't have really the same appreciation that and concentration. We do have the concentration risk in the Mag 7 stocks still, but they're not providing the same performance that they have over recent years. So it's given Wall Street analysts the chance to sort of outperform, but not outperform our quant system, which is up 22% year to date. So that brings us to the Pro Quant Portfolio. And one of the reasons why the Pro Quant Portfolio exists, along with another product that we have called Alpha Picks, is as I mentioned, you really can't invest in 400 or 350 stocks on a daily basis. So what we've done, particularly with a Pro Quant Portfolio, is we're taking our top 30 quant strong buys. We've created a portfolio out of it. And I'm going to give you a little bit of details on the Pro Quant Portfolio, which we just launched in the beginning of June on June 1st. So one of the reasons why we launched it is we ran a back test on this product. And the back test, which goes from January of 2015 to May of 2025, was up 1,632% versus the S&P for the same period up 162%. So this is a portfolio of 30 stocks that gets rebalanced on a weekly basis. And as you can see, our top 30 strong buys have performed extremely well during that back test period. So we indeed launched the product. The official date, I guess you could say, was May 30th of 2025. And just between May 30th and September 18th, the Pro Quant Portfolio is up a whopping 41% compared to the S&P 500 on an equal weighted basis, up 6.49%. And on a market cap weighted basis, the S&P is up 11.65%. And the reason why we show it on an equal weighted basis is because the Pro Quant Portfolio is equal weighted. So it's sort of an apples to apples comparison to the benchmark. And as you can see, the performance has been absolutely fantastic since we launched the product. A little bit on the portfolio construction and how it works. So we're choosing our top 30 stocks out of a universe of nearly 5,000 stocks. And as I mentioned, we're looking for companies out of those 5,000 that are collectively strong on those core investment characteristics of value, growth, profitability, momentum, and EPS revision. Again, it's equally weighted. The rebalance happens every Monday at the open of the New York Stock Exchange at 9:30. And when we do it, we actually use the prior Friday's closing price. And the reason why we have to use the prior Friday's closing price is we actually need that price to select the stocks. So the stocks get selected over the weekend based on the closing prices from Friday. And we use the closing prices on Friday to determine what the weights in the portfolio will be Monday at 9:30. I should add that we are actually going to change this strategy shortly. By popular demand, many of our subscribers to Pro wanted to use VWAP over the course of Monday, which is something similar to what we do with Alpha Picks. So we will be changing that strategy. Doesn't really impact the algorithm of the stock selection, but it does change the price that's used. So instead of using a price on the Friday close, we'll use the VWAP on a Monday, and we actually won't display it until Tuesday, along with the weights until Tuesday, because obviously trading has to close on Monday in order to get a VWAP. And VWAP is called volume weighted average price. So we're taking the average price over the course of the day. And a lot of individuals felt when we showcase performance, that would just be a fairer way to do it. So their performance could be closer to that of the portfolio. Going off to our next slide. When we buy and sell stocks, so a stock has to be a strong buy to come into the portfolio. It could be any stock in the US or any ADR across the world. We look at all market capitalization levels. Some of the criteria that would prevent it is if there was an SEC delay in reporting. We wouldn't want that type of company in the portfolio. The stock does have to have a certain amount of liquidity to make the portfolio. And you'll see on the final bullet point on the left-hand side, we do add stocks that are under $10. They are permitted. And the reason why I have that in there is for our Alpha Picks portfolio, that is a parameter, and we do not allow stocks in under $10. When do we sell stocks from the portfolio? We sell it the day of if it falls to a sell or a strong sell. We will remove a stock if it drops to a buy or hold only after a consecutive number of trading days. And that number of trading days is proprietary to us. So we don't really unveil that. If any M&A thresholds are breached, we would take a stock out of the portfolio. And similar to if we have a stock in the portfolio, if there is an SEC filing delay, we would take it out of the portfolio. So we often get questions in terms of our small cap recommendations. So some of the companies have market caps under 500 million or under 100 million. And often when we recommend those stocks, there's a lot of investors who are trying to buy it at the same time. So this would happen with any firm, and to much larger extent, if a small cap stock was recommended by Morgan Stanley or Goldman Sachs, that would put a lot of pressure on the stock price. It would go up far more than Seeking Alpha recommending it. But what I do is I tell people that they can always sort of put a limit on the stock. So if you do have a company that's got a market cap under 500 million, you'd probably want to put a limit order in and possibly wait for retracement if you miss it. Or you could set limit orders at various levels so you don't have to fill your entire order the same day. So by example, say you were going to buy 100 shares of the stock, you could put in for on that Monday, 25 shares, the following day, 25 shares, so on and so on until you fill the full amount that you want. So this is often an intelligent way to purchase small cap stocks that are being recommended by whether it be Seeking Alpha or a larger investment bank. There is a big benefit for having small cap stocks. It does add diversification. We're a big fan of diversification at Seeking Alpha, whether it's Alpha Picks or PQP. I'm a firm believer that diversification does minimize risk and maximizes returns over the long period of time. And those small cap stocks, even though they might be volatile in the beginning, over long term, they tend to really, really pay off. And it helps you build a basket of high quality stocks with small, medium, and large cap stocks. So if you like a company's fundamentals, but it's small, just enter into it gradually and build your basket. So if you're putting fresh capital to work, we often get the question, what is the best way to do it with PQP? People will say, do I have to buy all 30 stocks? It's important to keep in mind that the Pro Quant Portfolio is a portfolio of investment research ideas. So you certainly do not have to buy all the stocks. If you feel uncomfortable with some of the ADRs, or if you feel uncomfortable with small cap stocks, you do not have to purchase it. It also depends on your risk tolerance, the amount of capital that you have. So if you start, you could take 5 to 10 strong buy rated stocks, or you could allocate a small amount of capital across the entire portfolio, or you could just cherry pick names. You can look over that and just pick 1 or 2 stocks. So there's any number of strategies that you can use when you engage with the Pro Quant Portfolio. And Emma, I think from there, I'll sort of hand it over to you so you can review some of the our best performers and, in all fairness, some of our worst performers.
Yeah, excellent. So thank you so much, Steve. We did want to point out some of our top and bottom performers for the PQP portfolio. This is something, if you're an Alpha Pick subscriber, we like to highlight this on a biweekly basis. I guess two things to note. One, this does include stocks that have since been sold. So you'll see Willdan there, and the top performer was added to the portfolio on May 30th and was sold August 15th. And in that time returned an incredible 108%. But the two stocks above that, CommScope and China Yuchai International Limited, are both still open. So they're still, quant rated strong buys and adding returns to the portfolio. And then in terms of our bottom performers, you can see at the bottom of the page, those have all since been sold, but these are the biggest detractors from the portfolio since its inception. And I think the important thing to highlight here is just the orders of magnitude by which the top performers are outpacing the bottom performers. So if you're familiar with our Alpha Picks portfolio, not all stocks are winners, but the winners do tend to significantly outperform the losers. And I think that same principle applies here for the PQP portfolio. Again, a greater frequency of stock ideas. So in theory, more exposure to potential winners. I wanted to highlight a couple of our strong buys on the next page, Steve. Like I mentioned, CommScope, this was one of the stocks that is a top performer that was on the last slide, but this just kind of gives you a flavor of what informs these selections. So as Steve mentioned, these stocks are scored collectively across their fundamental indicators, which are value, profitability, growth, and then their timeliness indicators, which are EPS revisions and momentum. So you can see that factor grade scorecard to the right of the image there that highlights the valuation, growth, profitability, momentum, and revisions for CommScope, and those all roll up into that quant strong buy rating. Here I've highlighted some things about the company. It's on the smaller side, $3.61 billion information technology company. Out of the entire universe of IT stocks, it's rated number 2, and that's out of 541. That's a nice premium feature. For premium subscribers, you'd be familiar with the fact that you can just kind of drill into these names and get every statistic you'd really want about them, including how they rank from a sector and industry perspective. So top communications equipment communications equipment stock, 1 out of 40. They basically build and support technology infrastructure that powers the internet, wireless, and business connectivity. Huge servicer of data centers, which has been a boon for this stock. Just wanted to highlight, you can see from the factor scorecard that these factor grades are scored on a sector relative basis. I think that's important to highlight, but demonstrates really impressive profitability and growth. So in terms of growth, 62% year-over-year EBITDA growth. That's 528% above the IT sector. From a profitability perspective, they've got $200 million in cash from operations. That's 134% above the sector. And it's trading at a nice discount at a 13x price to earnings. That's a 49% discount to the sector. So those are some of the underlying metrics that help inform those factor grades. And I just wanted to pull forth those highlights. Again, return an incredible 130% to the PQP portfolio since its addition back at inception, starting at the close on May 30th. So our next slide.
These 3 stocks are still in the portfolio, correct? So
yes,
you're giving away 3 of our top ideas here.
Yeah. You're all the folks who are smart enough to join us get a little peek inside the portfolio today. So another quant strong buy that's still in the portfolio and was also added at inception is SSR Mining. This really evidences the strength of the quant model, which started picking up on the rally in the materials sector. So we saw, gold and silver stocks just take off. I mean, they've been doing well all year, but particularly accelerated at the start of summer. So SSR Mining is a gold miner with operations across the globe. Again, a bit on the smaller side, but at $4.42 billion, highly ranked materials, highly ranked gold stock, incredible growth, 23% forward EPS, 164% above the sector. This is something that's great about the underlying metrics. You can look at growth in the near term and further out. So from a long-term growth perspective, it shows 92% EPS forward long-term growth on a 3 to 5 year CAGR basis. That's 662% above the sector. So way higher. It's trading at a 0.2x PEG, price to earnings growth. So that's an 89% discount to the material sector. And in terms of its earnings estimates revisions, it's received 8 FY1 up revisions in the last 90 days versus 0 downwards. So again, since it was added, has returned nearly 80% to the PQP portfolio. So it's a nice mining option we've had for subscribers. And then lastly,
I'll actually add, I want to highlight on the factor grade card. As Emma mentioned, it's sector relative. So despite the fact that the stock is up 80% since the end of May, you can see the valuation grade on this is a B plus versus 6 months ago it was an A minus. So the valuation framework is almost exactly the same as it was 6 months ago, despite the stock being up so significantly. And then you could look underneath that valuation and you see growth is at an A plus, which is the same as it was 6 months ago. So that means relative to the sector, its growth is way, way higher. And relative to the sector, the valuation framework is definitely more attractive. So relative to the sector and its own historical average compared to 6 months ago, the stock still looks great. So you shouldn't be afraid of the fact that it's up almost 80% because that valuation framework is still there. And I'll hand it back to you so you could show the number 3 stock.
no problem. Thanks for pointing that out. And yeah, just wanted to round out a third option, TTM Technologies here. This is another IT stock, an electronic manufacturing services stock. Again, similarly sized to the other two, but it specializes in mission systems, radio frequency, and RF microwave microelectronic assemblies. Again, we're adjacent to the aerospace and defense as well as data center sectors. So you're getting some of that indirect exposure to AI growth. Certainly been a boon for this company. 25% forward EPS growth. That's more than 100%, 122% versus the IT sector, 34% forward operating cash flow growth, 131% above the sector. And then in terms of profitability, $4.34 in cash per share. That's 100% above the sector. I just saw a question come through, someone asking if this is summarized anywhere, and this exact the way information has been tabulated is not exactly summarized on the platform, but you can definitely glean all this information on the premium platform by drilling into those individual factor grades. And you'll see it's just a wealth of information. We're talking, hundreds of data points that inform these factor grades. And you can see, much more than what I'm actually showing you here. So
what? I'll take that. I'll go into the platform and we'll give people a little peek and
great.
see what it's like. So right now we're going to go to duplicate that and we're going to put in a ticker symbol. We'll put in SSRM, which Emma just reviewed. So right now we're on the Pro platform, and what you're seeing here is probably very similar to the premium platform as well. So in regards to that question specifically, it is really easy. You're within one click of seeing all those underlying metrics. So I'm going to click on growth for SSRM. And you could see we have an abundance of growth metrics, both year over year and the forward estimates as well, for revenue, for EBITDA, for EBIT, for earnings per share. And we break it down to a diluted basis, a GAAP basis. We look at leverage free cash flow per share, operating cash flow forward, ROE growth rate. So there's just a whole host of metrics you can see. The factor grades, the intention there is to give you an instant characterization of how that company compares to the sector. But we're very transparent, so we actually show you the data points as well. So by example, on the top row, you see the revenue growth rate of 6.2%. To the right of that, you'll see for the sector median, it's 2%. So the revenue growth rate for the company is at 192% premium to the sector. And then we show you what it is compared to its 5-year average as well. That's for growth. If I were to go into value, you would see the same thing. So if we look at PE on a forward basis, it's a B. In absolute terms, it is 13.89 times. That would be the PE versus the sector at a PE of 16 times. So it's at a discount to the sector by 14%. And then if you look at it on a GAAP basis, it's actually at a discount to the sector on 34%. Hence why the overall valuation is a B plus, saying that this is a better valuation compared to the sector. So I just wanted you to know a ton of metrics there. So you can see for PE, PEG, EV to sales, EV to EBITDA, EV to EBIT, price to sales, price to book, price to cash flow, all those metrics there for you to see exactly how it compares to the sector. And I will take us back to the presentation, Emma. And I believe you finished up on that slide. Is that right?
Yeah. Yeah, I think we're done with the strong buys.
Okay.
And I just wanted to mention how to follow trade alerts. I've seen some questions come through in the chat about the process. And, Steve mentioned at the top of the conversation that we will be changing currently the analysis is published at 9:30 a.m. on Mondays. The portfolio is rebalanced weekly. And so you will see the buys and sells for the week at that time until we make the change wherein the portfolio will be the trades will be published at 12 noon on Mondays, and then the performance will be calculated based on the volume weighted average price on Tuesdays. That's all to say, you will receive alerts on a weekly basis. They're distributed via the Pro Quant Portfolio platform. So that is the quickest way to see what the trades are. Be on the PQP platform at 9:30 a.m. on Mondays to see which trades have been made. You will receive an email that there is a slight amount of lag time. It takes typically about 5 minutes to receive the email as a reminder. And subscribers can view current positions, allocations, and performance in the portfolio tab. So that's just a little bit of process information for you folks.
All right. So that brings us to additional pro features to complement your research. So there are some really cool features in Pro that you don't get in Premium. You do have top analysts and top analyst ideas. So I'm going to go into the platform and show you that. In addition to the Pro Quant Portfolio, you also get to see the upgrades and downgrades for all the stocks, whether it is quant or contributors. And that's a really useful tool. And there's exclusive coverage for analyst articles that you get on Pro that you do not get in Premium. And if you like to short stocks or if you're a hedge fund, we have some great short ideas that come in from our contributors that you can't even get on Wall Street. I'm going to take us to the platform. So we will go back to where you see SSR mining. And if you looked on the left-hand rail, you'll see we have news, we have market data. And here are some of the features that I was referring to. If we go to top analysts and I click on that, this will show you the top 15 analysts. And this is somewhat of a leaderboard that we keep. We only show the top 15 and we measure it. They have to have at least 5 ideas that they bring forward. And we're track them over the course of a 12-month period. So it's at least 5 ideas or more over a 12-month period. This really gives you breadth in terms of the ones that have good recommendations and their success rate. Instead of just like saying, somebody could just pick one stock, we're trying to avoid that. So we want to make sure that they have at least 5 ideas. And you can see this individual, he has a 100% success rate. Average return has been 88% on 8 of his recommendations. So that is very good. That's actually a little bit stronger even than PQP. So if you're a Pro customer, you get that as an added benefit. And then if you click on top analyst ideas on that left-hand menu, this will basically show you as the ideas come in. So we've had quite a few articles that were written on the 17th, on the 16th, on the 15th. So we will show the ideas that are coming in from our top analysts. Again, these features are not available on the Premium platform. And then, of course, you have Pro Quant Portfolio. So as Emma mentioned, you could wait for the email, or you could be here Monday morning at 9:30. And as soon as the stocks are released, it will be here at 9:30. And you could just click on it. We're very transparent. We show the articles for every single company that we have written about. And then if you take a look at the portfolio performance, we can actually sort it here. And you can see we've had some incredible winners that came into the portfolio in the beginning of May. As Emma highlighted, CommScope Holding and CYD, both up over 100%. We have quite a few stocks that are up over 50%, as you can see. The portfolio, and I'm going to go on to another tab because it will actually show you, it's on this tab here, you can actually see the sector. So we have quite a few in financials, quite a few in information technology, We got a handful, good handful in industrials. And as you can see, there are quite a number of material stocks. Now, this does change, but what the model did a great job of doing, and you can see many of these material stocks are up double digits. New Gold up 43%, SSR up 81%, Kinross Gold up 49%, Goldfield Limited up 60%. And the model does a great job of, really finding companies that are collectively strong on value and growth at the same time. So if you have great growth rates and the values are really attractive, many of those stocks will come to the top of the model. Now, the model it does work on a bottom-up basis. So we are looking at the fundamentals of companies. It's not top-down, but when you have a particular sector that's doing well, the cream rises to the top and it shows up in our model. You can also see here the performance overall. So we're on the Pro Quant Portfolio platform right now. And if you click on, say, 1 month, you can see the performance of the portfolio over a 1 month period. It's up 12.4% versus the S&P up 1.2%. And it doesn't go back year to date, but this shows you from the inception point. So that's a little bit about the portfolio. Very transparent. You can see the date that it's picked. You could see the price that it was picked at. You could see the weight it has in the portfolio, and you could see the quant ratings as well, and the level of strength for that quant rating. So not all strong buys are created equally. There is a weight behind it, and this actually shows you what the weight is. And of course, you can see what the price return is. And not all of them have won. If I click here, obviously you can see the winners have been fantastic, but there are a few losers too, not many, and they really have not gone down that much compared to the winners in the portfolio. And I'm going to take us back to the slideshow. And we often get a lot of questions. What is the difference between the Pro Quant Portfolio and Alpha Picks? Alpha Picks was developed about 3 years ago. And that came at a time where, again, not, really investing in all the quant strong buys. It wasn't an option. So we came through with a product that just highlighted our top 2 quant recommendations every month. So on the trading date closest to the 1st of the month and the 15th of the month, we send out an email, and AlphaPix has its own platform. So that is different, where the Pro Quant Portfolio, we launched with 30 stocks right away, and it's always 30 stocks. It gets rebalanced every Monday, where AlphaPix, it could have 2 to 3 trades a month. As I said, the 1st and the 15th will have the buys. Occasionally there's a sell. So there's only 2 to 3 trades, where with the Pro Quant Portfolio, that's about the average on a weekly basis. There's about 2 to 3 trades versus per month. The stock universe is also far broader. For PQP, we're looking at US stocks plus ADRs plus all market cap levels. For AlphaPix, we do not buy stocks that are below 500 million. The stocks are US listed securities, with the occasion of a primary ADR that could be listed on a US exchange. There is no share price minimum for the Pro Quant Portfolio. And for AlphaPix, we do not buy stocks under $10. Trade alerts get sent out on a weekly basis with detailed analysis for PQP. And for AlphaPix, it's twice a month. And as I said, the turnover is 2 to 3 positions a week, where the turnover for AlphaPix is significantly lower. Emma, let me open it up to questions.
Awesome. 2 things, folks. I see a lot of questions about bundled offers for all of our products. It's a great question. I'm going to speak to some folks on the back end and see how best we can communicate those offers with you when we post the replay. So I believe you should get an email that highlights when this replay is posted, and that transcript will ideally include the bundled offers. Thanks so much for inquiring about that. It's a great question. Steve, you answered, I think, a lot of people's questions around the difference between AlphaPix and Pro, so thank you for that. This question is kind of an amalgam of questions we get a lot about, some of the difference between the PQP and AlphaPix portfolio and the gap up that can happen with small cap names. We covered it a bit in the conversation earlier, but is there a trade-off between small cap names and portfolio volatility? Maybe you could speak to PQB's unique value prop with those small cap names relative to AlphaPix.
So no question about it. When you have small cap, you have to be tolerant of increased volatility, but there is a payoff to small caps. They're undiscovered companies many times, or they could be in an industry that's really starting to take off, or they might have a unique technology in an existing industry that they are mastering and growing faster than other companies. But often when a company is in a growth stage like that, they typically might have more leverage and debt than a larger cap company. So sometimes it can be interest rate sensitive in the small cap sector overall. If interest rates are going up, small cap stocks tend to underperform. Having said that, when interest rates come down, small cap stocks tend to perform better. So we might be hitting a really nice cycle for small cap stocks if we find that rates are coming down. But no question about it, there is volatility. However, as I mentioned, over the long term, diversification can really be your friend. So we look for diversification amongst factors such as value and growth, but we're also looking at diversification for small cap and large cap, as well as US and international. And that maximum diversification, although at times it comes with more volatility, it usually has better returns over a long period of time.
Well said. This is another process-oriented question. Short question. I've just signed up for Pro. Are we getting invited for regular calls to discuss the portfolio and new picks versus buys?
Well, we do have is every Monday at 9:30, the analysis goes out. Typically with the calls, we're doing it every other week for the webinars. If it's something that increasingly seems like it's popular, we can move that to weekly. Right now, though, with the number of people that are signing up, it seems to be working on a basis of twice a month.
Awesome. I've queued up some of the live questions here. Great question about how we think about a top-down versus bottom-up model. In the PQP portfolio, is there some consideration given to diversity of sectors or industries to prevent overconcentration in certain sectors?
Great question. And the answer is yes. We actually have built into the model. It is proprietary. We don't give the trigger amount, but if it is being weighted too heavily towards a specific sector, it will prevent stocks from that sector coming into the portfolio, and it will go to the next best stock in the next sector. So we do pay attention to the concentration risk.
Great. Now, I think you covered this a bit, but maybe your elevator pitch of why an Alpha Pick subscriber might change to Pro.
Greater diversification. You're getting international stocks, and you're getting far more smaller cap stocks in Pro than you get in Alpha Picks.
Great. And another kind of rebalance methodology question. Does Pro let winners run even when they fall to hold, similar to Alpha Picks? AP keeps them for 180 days, I believe.
That is absolutely correct. Alpha Picks will keep a stock in there for 180 days. It really does let the winners run. In the case of Pro, it lets the winners run as long as it's a strong buy or a buy. We'll keep a hold in there for a much lower amount of time than we do with Alpha Picks. And the reason why is since we're rebalancing on a weekly basis and we're averaging 2 to 3 new ideas per week, we tend to really focus on the strong buy stocks. So we don't have the holds in there quite as long.
Great, makes sense. And then I think lastly, since we're coming up on time, are there ETFs or funds that simulate PQP?
There are not. Thank you for asking that question. Most likely we will not issue any type of ETF. Seeking Alpha is not an asset manager, and we're not a broker dealer, we're not an investment bank. We provide independent research, and you subscribe to our service to get that investment research. So, our sort of belief at this point, and I don't see that changing any time soon, is we will not be entering the asset management field. We like providing investment research. It's fun.
Yeah, it'd be a bit of a different regulatory status too if we became an asset manager. But
Absolutely.
folks, I've loved the participation on the chat. Everyone's so enthusiastic. We are up on time, but I encourage you to redirect some of your questions to the replay that will be posted, and we'll, as always, try to answer there.
I guess, Emma, I will say at the end, if you do not have the Pro Quant Portfolio or Pro, if you are on the Seeking Alpha platform, all you have to do is look for Pro. You'll see that on the left-hand menu, or you'll see it on the very top about how to subscribe. And you could choose either Premium or Pro. once you subscribe to Pro, you automatically get the Pro Quant Portfolio product. Thank you so much for attending this webinar today. We wish you all the success in the world as you make your investment decisions, and hopefully our tools and resources will help make you better investors. Thanks all. Thanks for your time today and take care.